Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Ukraine under siege. Markets collapse as the world braces for another wave of uncertainty. What effects could the war have on cryptocurrency? Retaliation to Russia. Economic sanctions from Western nations intensify, leading to warnings of an imminent cyber attack on the global financial system. Everything you need to know. El Salvador The Savior. As governments around the world infringe on financial freedoms, the Salvadoran president works to offer a way out to those who want it. Is Tonga next to offer the same? Pro-crypto politicians. Representatives in Europe, Brazil, Mexico, and the United States push reasonable crypto regulations. Why are they turning to crypto? The SEC versus Wall Street. Crypto's most infamous regulator takes aim at Tesla and short sellers while losing ground to Ripple in court. How this could all help the crypto industry. UST Backed by BTC. Terra's Luna Foundation Guard establishes a massive reserve to help stabilize its decentralized stablecoin. Has Luna's rally just begun? And a closer look at what comes next in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, the world watched in horror as Russia invaded Ukraine. Now, there's a lot to unpack here, and I will begin by saying that my heart goes out to all of those affected by this. Our thoughts are with you. Now, I want to extend a word of caution to everyone who's following what is going on. The reality is that nobody knows what is going on except those who are in Ukraine, and it looks like even most of them are in the dark. We're in the middle of what's known as the fog of war, and it's safe to assume that most of the information about this war is being manipulated by media on both sides to push a narrative that's favourable to their respective audiences. As such, everything I'm about to say should be taken with a grain of salt, because it's based on information that very few, if any of us, can verify. I am by no means an expert on this matter either. All that we can say for sure is that Ukrainians are suffering, that Russians are being arrested for opposing the invasion, and that this conflict is nowhere close to being resolved. It's also becoming clear that Russia was planning this move for many years, possibly as far back as 2014, when Russia invaded Crimea, which resulted in the same sort of sanctions we're seeing today. This is evidenced by the government's selling of US assets and its accumulation of non-US assets, including gold, foreign currencies, and cryptocurrencies, which began around that time. Estimates of exactly how much cryptocurrency Russia holds vary significantly, with some saying its crypto treasury is worth just $22 billion and others saying it's worth a whopping $220 billion, which would be roughly 12% of all the crypto in circulation. The University of Cambridge here in the UK also estimates that Russia accounts for nearly 14% of Bitcoin's total hash rate, making it the third largest crypto mining country after the United States and Kazakhstan. If you want to learn more about the current state of crypto mining, you can check out my video about that using the link in the description. Now, Russia's significant cryptocurrency holdings and mining contributions likely played a role in the insane volatility we saw in the crypto market late last week, which dropped more than 12% on news of the invasion. Another contributing factor was, of course, leveraged traders, who lost close to $500 million in liquidations during that time. These liquidations drove prices much lower than they otherwise would have gone, creating the long wick at the bottom of the daily candle for BTC, as you can see here. If you're wondering why the crypto market recovered, the answer seems to be some amount of certainty. Now that investors know Russia has invaded, they can hedge themselves accordingly. The price action of asset markets after previous invasions of foreign countries supports this thesis, and this historical trend, along with other indicators, suggests the recovery could actually continue. However, there is another black swan which could emerge in the coming weeks that I must bring your attention to. As I mentioned a few moments ago, many countries around the world, though chiefly those in the West, have been imposing harsh economic sanctions against Russia in response to its invasion of Ukraine. The so-called nuclear option in this regard is removing Russian banks from the Society for Worldwide Interbank Financial Telecommunication, or SWIFT system. For context, the SWIFT system is how over 11,000 banks in 200 countries communicate, and it is estimated to handle about half of the world's high-value transactions on any given day. The Russian president has stated that removing Russia from the SWIFT system would be interpreted as an act of war, and this has led to fears that the Kremlin could mount a cyber attack in response. Initially, many international relations analysts thought that removing Russia from the SWIFT system was off the table. Besides resulting in a possible cyber attack against the SWIFT system by Russia, it would make international trade with Russia extremely difficult. For those who don't know, Russia is the third largest producer of oil in the world and is also a significant producer and exporter of raw materials, including grains, precious metals, and chemicals used to make food, namely fertilizers. Ukraine also plays an integral role in these industries. SWIFT-level sanctions would therefore cause the cost of just about everything, everywhere to increase by anywhere between 50 to 150%, primarily due to increased energy costs resulting from oil and gas shortages. This would lead to serious economic and political instability around the world. It now looks like Western governments are going ahead with cutting select Russian banks out of the SWIFT system. The President of the European Commission has confirmed that this will, quote, effectively block Russian exports and imports. Not only that, but Western countries are coordinating to freeze a substantial amount of Russia's financial reserves, most of which are held in central banks outside of the country. If they follow through on these sanctions, I believe that two things are likely to happen. First, there is a significant chance that Russia will respond in kind in the form of a cyber attack on the SWIFT system or similar, and it's something that Western countries have coincidentally been preparing for. This begs the question of whether Western countries knew this was coming, given this information about Russia's de-dollarization was in plain sight, and the consensus seems to be that it was not a question of if, but when. Second, there is a significant chance that Russia will turn to cryptocurrency in some way, shape, or form. If it does, you can bet that we're going to see regulators raise hell about how cryptocurrency is being used to evade sanctions, even though this is logistically impossible to do because of liquidity and traceability. Something tells me that these regulators won't care that cryptocurrency is currently being used in Ukraine in lieu of fiat because its banking system is barely working, and tens of millions in crypto donations are being sent there in an attempt to keep people safe and alive. This means that we could see some very severe anti-crypto rhetoric and possibly even severe anti-crypto regulations emerge in the coming weeks. Note that I'm not an expert and everything I said could have changed by the time you see this. All I do know is that governments are desperate for an excuse to get rid of crypto, and if this ends up being the one they run with, it's imperative that we speak up, or we might end up with central bank digital currencies instead. You can find out more about why that is something to avoid at all costs by using the link in the description. Anyways, while the rest of the world fights for control of the financial system, the Salvadoran government is looking to plant seeds of freedom in its pro-crypto country. As explained by President Nayib Bukele, quote, "The plan is simple. As the world falls into tyranny, we'll create a haven for freedom." To that end, Nayib hopes to pass 52 bills through the Salvadoran parliament to, quote, remove red tape, reduce bureaucracy, create tax incentives, citizenship in exchange for investments, new securities laws, stability contracts, etc. As you'll know, El Salvador made Bitcoin legal tender last September, and though the move has been met with scrutiny from dollar-dependent international organizations, El Salvador apparently saw its largest GDP growth on record last year as a result. It appears that the Salvadoran government also recently passed a series of bills that pertain to its upcoming Bitcoin city, which will be funded by the purchase of Bitcoin bonds and powered by a nearby volcano. The aptly named volcano bonds are expected to be issued next month, with construction of the city expected to commence by the end of the year. It's worth pointing out that this is not the first time plans were floated for a futuristic crypto city, and we've yet to see one come to fruition. For the time being, however, it looks like El Salvador's remains on track. Across the water, the island nation of Tonga is back to planning its own transition to a Bitcoin standard after facing a devastating tsunami caused by a nearby volcano eruption in January. Former Tongan Member of Parliament Lord Fusitua detailed a 4-step plan, as well as a timeline for the country's Bitcoin adoption to Cointelegraph reporters. The first step will be BTC remittances. The second step will be BTC as legal tender. The third step will be Bitcoin mining, and the fourth will be holding BTC as the country's reserve currency. In terms of timeline, Fusitua forecasts mid-February 2023 for when Bitcoin becomes legal tender in the country, with Bitcoin mining beginning before 2024. Like El Salvador, Tonga is riddled with volcanoes which produce more than 50 times the amount of energy the country needs to operate. Cointelegraph noted that shipping containers filled with ASIC miners have already arrived in the country, but nobody knows who they belong to, nor when they'll begin their operations. In any case, it's clear that Tonga is setting itself up to be the next safe haven for crypto holders. And if you're wondering what other countries are kind to crypto, you can find out using the link below. Anyhow, as crypto adoption around the world continues, the distinction between pro-crypto and anti-crypto countries is becoming less apparent. This is simply because politicians can see that being pro-crypto will win them votes, and being anti-crypto will lose them votes. This effect is starting to emerge in Europe, where many politicians have been hostile to cryptocurrency, especially cryptocurrencies like Bitcoin that use proof of work as their consensus mechanisms. In a surprise move, a member of the European Parliament has indefinitely postponed a vote on an upcoming crypto bill called the Markets in Crypto Assets, or MiCA. This is because the bill contains a problematic clause that could be misinterpreted as a blanket ban on proof-of-work cryptocurrencies. What's crazy is that the contents of the bill itself were leaked shortly before the vote was postponed, suggesting that there's an intense power play at work behind the scenes from competing interests. As you might have guessed, a handful of European politicians have been actively pushing for a ban on proof-of-work due to its alleged energy use and effects on the climate. It seems they missed the memo on that misinformation, and you can get the facts by using the link in the description. Meanwhile, the largest country in Latin America is on the cusp of approving a bill that will bring regulatory clarity to the crypto industry. The bill was originally proposed way back in 2019, and it just recently passed through the first of many hoops required to become law. If approved by the Senate and President, Brazilian politicians believe the country will see even more crypto adoption than it already has. To the north, a Mexican politician is planning on tabling a pro-crypto bill which includes making BTC legal tender. Although the bill is very unlikely to pass, it's more evidence that pro-crypto sentiment has been growing in the private and public sector of the country. The United States is seeing a similar phenomenon, with politicians tabling bills to accept crypto for taxes, bills to give perks to crypto mining companies, bills to ensure self-custody of cryptocurrency, and even bills for state-issued stablecoins. Many of these bills were tabled after the Canadian government froze the bank accounts of people protesting pandemic restrictions in the country, using an emergency law meant for wartime that was revoked when it became clear the Canadian Senate would vote against the law's continuation. It seems that these shameless power grabs are becoming more blatant by the day, and no hands are grabbier than those belonging to SEC Chairman Gary Gensler. This time around, Gary is trying to get at Tesla, whose CEO Elon Musk has been highly critical of the regulator, to say the least. In what appears to be a response to Musk's constant criticism, the SEC is now investigating the Doge father and his brother for insider trading. This is because they sold the Tesla stock top in November after Elon pushed a poll on Twitter asking his followers if he should sell, something that some believe was premeditated, including the SEC, apparently. Elon has vowed to fight the SEC until the end, and all I'm hoping is that the outcome has zero effect on Tesla's massive BTC treasury. The SEC is also trying to clamp down on short sellers on Wall Street by forcing them to disclose their short positions on a more frequent basis when they exceed a certain amount. Without getting too technical, short selling involves borrowing a large amount of a stock and selling it on the assumption that the price will fall, so that when the day comes to repay, they buy back the stock at a lower price and return it with a profit. As the GameStop saga revealed, however, when the apes, aka retail investors, get together to push up the price of a stock that's being shorted, it can result in massive profits for them and massive losses for the foolish institutions who took on too much leverage. With some luck, this will reduce the number of overly speculative short positions big institutions have on certain assets, including gold and cryptocurrencies, which could be having a negative impact on their prices. You could say that the only thing worse for a cryptocurrency than being shorted by institutions is being on the receiving end of the SEC's regulations. And this is the position XRP has been in since December 2022. Now, if you've been keeping up with my coverage of the SEC's case against Ripple, you'll know that there have been many twists and turns so far. The biggest bombshell yet comes from a former SEC official who recently said that the SEC is likely to lose the case, and this could, of course, set a serious precedent for any other crypto projects the SEC tries to go after. Speaking of which, Terra founder Do Kwon was recently ordered to appear in a US court by the SEC because of his involvement in the development of Mirror Protocol. For those unfamiliar, Mirror Protocol is a DeFi protocol on the Terra blockchain that makes it possible to trade synthetic stocks, tokens that literally mirror the price of the assets they represent. Mirrored assets are collateralized using Terra's decentralized UST stablecoin, which is in turn collateralized by Luna. Over the last year, UST has become the largest decentralized stablecoin by market cap, and this is in large part due to the continued crackdown on and regulatory uncertainty around centralized stablecoins like USDC and USDT. UST's rise, along with the emergence of powerful Terra protocols such as Mirror and Anchor, has made Terra a top target for regulators around the world, but the project and its proponents have so far continued to charge onwards towards truly decentralized currency. This was put on full display when Terra's recently incorporated non-profit, called the Luna Foundation Guard, or LFG, announced that it had raised a staggering $1 billion in an OTC sale of Luna to some of the largest VCs in cryptocurrency. The LFG will use these funds to create a massive reserve consisting of BTC that will serve as a backstop in the event that, due to unprecedented market conditions, the UST stablecoin is completely thrown off its peg and Luna's novel mint and burn mechanism isn't enough to restore it. The LFG has yet to detail exactly how BTC will be used to collateralize UST, but the foundation has noted that it will be adding other assets to its so-called Forex reserve in the near future. The significance of this cannot be understated because it opens the door to a world where currencies are backed by hard digital money, the same way that national currencies were once backed by physical gold. Naturally, Luna rallied on the news, and assuming the bottom doesn't completely fall out of the crypto market on account of world events, it's likely this rally will continue. Full disclosure, I hold both Luna and UST as part of my personal cryptocurrency portfolio. If you're wondering what other cryptos I hold as part of my portfolio and how it performed in 2021, you can find out using the link in the description. Turning to the charts, we can see that BTC continues to solidify a zone of price support between the 38 and 40k range. If you zoom out, you can see that we've spent a lot of time bouncing around this price in the past. And the more that we do that now, the better it will be for BTC, so long as the long-term uptrend remains. Higher lows, higher highs. That's what matters, and so far, that's what we've seen. Taken together, this suggests the crypto bull market is not over, and this can be seen in the price action of altcoins as well. This week's winners are Anchor Protocol, Terra, Waves, Arweave, and Cosmos. Starting with Anchor, ANC is rallying because the Anchor Protocol's reserve yields were recently capitalized with $450 million UST from the Luna Foundation Guard, making it possible for UST holders using the protocol to earn a stable interest rate of 20% on their UST stablecoins for another year. As I mentioned in my recent video about Anchor Protocol, 10% of the UST coming into the yield reserve is used to buy ANC, and though it's not clear whether the recent injection of capital counts to this subsidy, the increase in UST borrowing and bonded asset collateral is probably creating buying pressure. Even so, ANC's issuance is aggressive, and this means it might have a hard time rising any higher than $4, especially since there's a lot of price resistance around that level. Next up is Terra's Luna, which I just tackled, but I reckon it's worth taking a closer look at the technicals. On the daily, I see a bull flag forming that could take Luna to around $90, which is where it's likely to see some sell pressure. Zooming out to the monthly paints a similarly bullish picture, with a potential price target of $120 if we're able to close at or above that $90 level next month. That's a bit of a coin toss at this point in time, if you ask me. When it comes to Waves, my best guess is that the Waves coin is rallying because it's a Ukrainian crypto project and Ukrainians have been adopting crypto as a means of moving money around amidst the chaos. Unfortunately, Waves is well below its recent high, and its long-term uptrend is not nearly as strong as other altcoins. It's a similar story for Arweave's AR coin, which is pumping because of all the headlines about the invasion that are being permanently archived to its blockchain by crypto journalists. AR is still struggling a bit on the price side, but the consistent demand for decentralized storage coming from other blockchains like Solana that rely on Arweave are keeping AR's price in a long-term uptrend. Note that I also hold AR as part of my personal portfolio, and I take no pride in the fact that it's rallying because of a crisis. I'm just glad that we have a way of storing valuable information in an immutable way, because we need it now more than ever. Last but not least, we have Cosmos, whose Atom coin seems to be inching upwards in anticipation of the launch of Evmos, a Cosmos-based cryptocurrency with support for the Ethereum virtual machine. Evmos is expected to launch today, and it could end up being a sell the news event for Atom. Alternatively, it's possible that it will continue to reach for the stars, given that it's still in a very strong uptrend compared to other cryptocurrencies and has established a solid zone of support around the $30 range. If you want to learn more about Cosmos and its ecosystem, you can do so using the link down below. That's all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you've got some crypto to blow, consider heading over to the Coin Bureau merch store. It's got sweaters, tees, hoodies, beanies, mugs, and more. You can find your way there using the link in the description. Thank you so much for watching, and I'll see you all in next week's episode.